As we look back on 2023 and look forward to the rest of 2024, what are some of the best investment and trading opportunities across various asset classes that we can invest in at the moment? In this video collaboration with XN, I will cover various asset classes such as stocks, stock sectors, bonds, commodities, cryptocurrencies, and analyze which ones give the best upside potential. With over 5 million clients since it was founded in 2009, XN has grown to a large and well-established international investment firm and has become a true industry leader involved with offering a wide range of products and services. For this video, the first part will be a review of 2023, looking at what the investment themes were, how various asset classes performed. The second part will be looking at the investment themes for 2024, the macroeconomic outlook, and lastly, the projected market performance for each asset class and whether it will be a good investment. Enjoy the video and remember to like and subscribe. 2023 marked a significant year in the world of finance, characterized by recovery and realignment in the wake of the COVID-19 pandemic. Technology and consumer discretionary sectors notably rebounded, outperforming defensive sectors as they adopted to post-pandemic economic conditions and shifts in consumer behavior. In other words, it was a risk-on scenario. So central banks, particularly the Fed Reserve, played a pivotal role in this landscape through the strategic interest rate adjustments in response to previous high inflation rates. So these policy shifts greatly influenced the bond markets, especially those that are sensitive to interest rates, while commodities like oil, gas, and gold saw notable price movements reflecting global economic trends and investor sentiment towards safe havens. Last year also witnessed challenges in the banking sector, highlighted by a regional banking crisis in spring 2023, if you remember the Silicon Valley Bank. And so this tested financial system reliance and prompted intervention by central banks and authorities. There was also a lot of geopolitical tensions affecting currency values and investment strategies. So cryptocurrencies experienced a resurgence, highlighting a renewed investor interest and confidence in digital assets right after the long crypto winter. So overall, 2023 was a testament to the adaptability and resilience of global financial markets after navigating through a complex mix of economic challenges, policy shifts, and geopolitical events. So this review will encapsulate these developments, providing insight into market performance and the implications for the future. So what are some of the top investment themes of 2023? First, there was the revival of tech stocks. So we saw a remarkable resurgence in tech stocks, right, with the leading Magnificent Seven, right, the mega cap tech stocks, right, like Apple, Amazon, Microsoft, right, Nvidia, propelling the whole sector forwards. And this renaissance in tech stocks, right, after a period of relative underperformance, this really showed that the tech sector is always very resilient and innovative. Right, and then there was also the generative AI revolution, right? So another significant thing was OpenAI, right? Creating ChatGPT, right? And so a lot of companies that are involved in AI development and application that attracted a lot of investment, right? And it kind of indicate, right, that the market's recognition for AI as a potential transformative force in the economy. Next, there was the cryptocurrency recovery, right? As I mentioned earlier, there's a rebound, right, in 2023, right, after many several years, right, of downturn. So a lot of these crypto expectations were around the launch of the Bitcoin ETF, right, which we saw, recently this year, right? So that caused a rebound in crypto prices. Okay, so now let me do a quick market review of the various asset classes in 2023. Okay, so the first is equities, right? We saw that in the tech and the consumer discretionary sectors, right? There was a strong rebound, right, in these two sectors, and it was fueled by investor optimism about the future growth prospects, right? Tech innovations, and also a shift in consumer spending patterns. So these tech giants, right, like the Magnificent Seven, right, which I mentioned before, they significantly outperform the broader market. Right, so this is a bit of an anomaly because now a large part, right, of the whole index, right, is quite it's just formed, right, by these seven stocks, right. I think about at least 20% now, right, it's just these seven stocks, right. So that does create a bit of an imbalance in the market. Okay, and in contrast, right, the defensive sectors such as utilities, healthcare, and consumer staples, they actually underperform the market, right? And this is because of the rising interest rates, right, last year, and also there was a shift, right, in investor preference towards more growth-oriented stocks, right? Basically, the tech sector, right? So usually, for these kind of defensive sectors, people like to play when the market is stable, you get dividends, right? But in 2023, because the market was so strong, right, people will tend to go for like growth stocks, right, for the best returns. Next, we have the bond market, right? And the bond market was, greatly affected by the rising interest rates, right? So, when interest rates go up, bond prices go down, right? So we saw that, the government bonds and a lot of the other interest rate sensitive bonds, right, they saw a decline in value, right? So as the yield of these bonds, increase, right, it reflects the increased risk and the reduced demand for bonds. Okay, next we look at some commodities, right? So oil and gas, it experienced a strong year, right? Because high energy prices was a driver, right, of this performance, right? Because of the geopolitical tensions, right? So if you remember, I think it was last year was mainly the Ukraine war, right? So that affected a lot of the commodities, right? And also because of the rebound from the pandemic, right? So there was an increase, right, in demand for these things. Okay, so gold is always a safe haven appeal, right? So even though the stock market was very bullish, right, gold also saw a significant rally in 2023, right? And it's also because of people looking for safe haven assets, right, amid the economic uncertainties and inflation concerns, right? So typically gold is seen as a hedge, right, against inflation, right? Because there was a lot of concern about inflation in last year, right? So gold, also went up, right, in value. Okay, oil prices remain strong, right, throughout 2023, right, and because of the sustained global demand, right, the geopolitical tensions, and also the supply side constraints, right. So the ongoing conflict in Ukraine, tensions in the Middle East, right, and OPEC, right, supply management, all these contribute to the price stability and strength in the oil market. Lastly, on the forex side, right, the US dollar experienced a lot of fluctuations, right, because of the geopolitical tensions and also the varying economic policies across different nations, right. So typically, the US dollar is seen as a safe haven, right, but because of the domestic inflation concerns, and the Fed monetary policy decision, right, we actually saw the US dollar kind of trading in a range, right, for most of 2023. As for cryptocurrencies, right, we saw a strong rebound, right, last year, right, and also then this rebound, right, it was driven because of there was increased mainstream adoption, right, and also the potential launch of Bitcoin ETFs, right, because once these ETFs are launched, right, which we saw recently, a lot of people are who previously do not know of crypto or do not have access to it, right, now have an easier way, right, to buy into crypto, right. So that's going to cause a lot more demand. Right, so overall, this detailed analysis of various sectors in 2023 highlight that 2023 was quite a complex year, right, with many things happening like macroeconomic factors, geopolitical tensions, right, and also shifting investor sentiment, right, driven by inflation and the increase in interest rates, right. So each asset classes kind of responded quite differently, right, to these different dynamics. Okay, so now let's move on to the forecast for 2024, right, which I believe is what most of you are looking forward to. Okay, so there are three main investment themes, right, that I expect for 2024, right. Some we have already seen play out, some are still in progress. Okay, so the first is the emergence of AI as a key driver, right. So we've already seen this, a bit of this in 2023, right. But I think we're going to see more of it, right, as as more and more people, and investors, right, look towards AI. right? So the year 2024 is set to be, to see AI solidify its position as a dominant investment theme, right? Following the surge, right, which we saw last year, the companies in the tech sector, especially those involved in like semiconductors, computer hardware, software, right, all expected to go up even more, right? So we have seen this year already, companies like Nvidia, AMD, already gone up a lot, right, this year. Okay, and the focus is likely to shift towards companies that adopt AI for enhancing productivity across various industry, right? So we're going to see a lot more of the applications, right, of AI. Okay, secondly, there's going to be renewed interest in specific stock sectors, right? So the real estate and financial sectors, right, which did not perform that well, right, in 2023, are expected to make a strong comeback this year. Right? And these sectors will benefit from easing monetary policies, right, such as interest rate cuts, right? So these are expected, right, to outperform the market this year, right? So already we have seen the early part of this year, we have seen the financial sector gone up quite a bit, right? But the real estate sector so far is still quite promising, right? So that's something that we can look out for. Okay, and thirdly, right, there is the cryptocurrency, right? So as sort of like a continuation from last year, last year there was a period of like recovery and a lot of like regulatory shifts, or discussion, right? And this year, digital currency is expected to gain further traction, right? So this is once again, going to be driven by more mainstream adoption, innovations in blockchain technology, right? There are building a lot of new things, right, on top of cryptocurrencies, right, different layers, right, and there's also a growing recognition of cryptocurrencies as an alternative investment vehicle, right? So after the Bitcoin ETF came out, right now you see funds, even like Fidelity, they are recommending Bitcoin as part of their balanced portfolio, right? So we also see BlackRock, accumulating a lot, right, of Bitcoin. Okay, so before we go into to deep dive each asset class, right, first let us look at the overall, macroeconomic outlook, right, for this year and what are the things to look out for. So I think that this year, there's going to be quite modest global economic growth, right, because the landscape for 2024, right, it's going to be like gradual, and steady growth, right? We won't see any like large growth spurts because kind of the economy is kind of not that bullish, right? So I think analysts expect, this kind of like slow and steady growth to last until mid 2025, right, which is kind of like an elongated expansion, right, at at a slower pace compared to previous years, right, because 2023 the market already went up so much, right, so we cannot really expect the market to keep going at the same pace. Okay, and the US economy, right, is going to play a crucial role, right, so its ability to effectively manage and navigate through the ongoing inflationary pressures, right? So whether the US, can bring down its inflation, while still maintaining, right, the good economy, right, such as the jobs and consumer spending. Okay, so if the US does manage to do this, right, it will be able to set a positive tone for the global economy, right? But currently we see that they are still reluctant to cut the interest rates, right? Because it is really very hard to bring down inflation, right? So now we are seeing them postponing, right, the interest rate cuts. Okay, so Europe's economy is even more complex, right? Because Europe is currently, suffering from high energy prices, right? Because of the Ukraine war, which is still going on, right? Causes a lot of supply chain disruptions, right? So this will affect consumer spending and business investment, and also push down economic growth. Okay, so the UK, right, it might be an exception, right, because there's still quite some optimism, right, in the UK, and this is driven by a combination of fiscal policies, a responsive monetary framework, right, and also a more stable political environment after the post-Brexit. Another important factor is government spending and debt levels, right? So the government spent a lot in the post-COVID recovery, right? So whether the government, is going to continue, these policies to stimulate growth, right? Or are they going to find ways, right, to combat inflation, right, without, increasing the debt levels, right? So that is a very crucial balance, right, that we need to see whether the governments are able to pull off. Okay, so on the other side, right, is the consumer behavior, right? So consumer spending, consumer confidence, right? This is always a major growth driver, right? So we need to see, how the changing trends, right, such as like digitalization, health concerns, economic confidence, right? How all these things are going to affect consumer behavior. Okay, lastly, another one of the major macroeconomic factors for this year is the U.S. presidential election, right? So while it may seem that it's mainly like confined to the US, right? But because whoever wins the election, right, will kind of affect the type of policies, right, that's going to be for the next few years, right? So therefore, this whoever wins, right, does have a very significant impact, right, on different markets, right? Because different policies are going to affect the economy and affect different markets differently, right? So but overall, historically, the US markets have performed well in the years that there's a presidential election, right? So, that is, I guess, one bullish factor, right, to look out for. Okay, so next, besides the macroeconomic outlook, right, another important factor is the inflation and interest rates, right? Because much of almost the whole 2023, right, everyone was always just talking about inflation, how to bring down inflation, and the interest rates, right? So the government just kept raising the interest rates in the hope of pushing down inflation, right? And in a way, they did succeed, right? Because we have seen the inflation come down, right? So the question now, is whether how long more are they going to hold at high interest rates, right? Or are they planning to start cutting the interest rates, right? So we have seen that that currently they have delayed, right? They've started to delay the interest rates, based on the most recent CPI data and also the jobs data, right? Because they feel that the inflation is still strong, right? So we'll need to see, currently it's projected that the first rate cut is going to be somewhere in June, right? But we need to see, whether it's likely to be pushed back further or not, right? So that is the trend going forward. Okay, so one other thing that has been discussed quite a lot, right, in 2023 is whether there's going to be a recession. US government faces, a challenge, right, in 2024 because they want a soft landing, right, for the economy. They don't want the economy to crash, right? But at the same time, they don't want the economy to be too strong, right? To push, to keep pushing up the inflation, right? Which then leads to a recession, right? So that is why they have kind of like decided to slow down the interest rates. Okay, so for 2024, right, much depends on the interplay between the continued inflation control and at the same time managing economic growth, right? So analyst forecasts so far are quite varied, right? Some expect slow yet positive growth, while others are cautioning about the risk of a mild recession, right? So the Fed's reactions in the first half of 2024, right, will be very important, right? So far we have seen that they are not, they are taking a more cautious stance. So if inflation rates continue to decline, right, and we see economic indicators like consumer spending, manufacturing output, right, remain healthy, then the likelihood of a soft landing increases, right, which it seems that we are on track. Okay, conversely, if the inflation remains high, right, or if the economic indicators weaken, right, then the Fed may raise tough choices, right, because they are forced to hold the interest rate high for a long time, without being able to cut interest rates, right? So that could also happen, right? Because we have seen them already push back once, right? So they might continue to push back several more times. Okay, lastly, what are the projected market performance for the various asset classes, right? So now I'm going to do a deep dive in each of the market, right? This is probably the most exciting part, right? Because here are some of the potential investment opportunities, right, for the rest of this year. Okay, so starting off with the stock sectors. So the S&P 500, we saw a very strong performance, right, in 2023. So we expect it to continue the trend, right, in 2024. And analysts forecast an 8 to 9% increase, right, which is slightly below the historical average of 10%. And the key drivers projected are AI and tech stocks. Okay, so based on the chart, right, the market has actually really gone up quite a bit this year. And personally, I think there's about 10 to 15% more, right, before we see it run into any major resistance levels. Okay, so for AI and tech stocks, right, companies like Nvidia, right, which went up 234% in 2023, is likely to continue the growth trajectory, right, and driven by strong demand for AI applications in various sectors, right, and there are a lot of other strong AI stocks as well, right, like AMD, C3 AI, Palantir, right, many of which are also performing very well. And there are also the big tech firms, right? The Magnificent Seven, right? Like Google, Amazon, Apple, Microsoft, right? Which are all expected, to pivot strongly into AI, right? So a lot will depend on what are their new development, their new product launches that are AI related. Okay, so outside of the US, right? We look at emerging markets. There are emerging markets. They are still always kind of volatile, right? And if the US dollar weakens, right, then that will actually be bullish, right, for these markets, right? And if the market kind of starts to rotate, right, between if people want to like reduce their exposure to the US market, right, then we might see flows of money into emerging markets, right? But for looking at the overall emerging market, right, China does not seem to be doing that well this year, right? But other markets such as like Japan, I wouldn't consider Japan an emerging market, right? But other markets in I would say the Asian region, right? We have Japan, and India, right? Which India has been performing very strongly, right, last year, right? And I think there's a good chance that it's going to continue this year as well. Okay, next for the bond markets, right? So last year bonds actually performed very badly, right, because of the increasing interest rates, right? So if this year, right, they are going to cut the interest rates, right, then the bonds, right, such as like long-term bonds, treasury bonds, right, these are actually going to be strong performers, right, for 2024. Okay, next for the commodities, right, for oil, I think prices are expected to stabilize right after the volatility last year, right? As for gold, I think gold is actually one of the potential strong performer, right? We saw quite some gains last year, but I think that where gold is, I think we have recently seen gold break new highs. Right, I think there is at least a 15 to 20% upside more on gold, right, for 2024, right? So that is something that I'll be accumulating in my portfolio. So the US dollar performance will be influenced, obviously by the Fed rate decision, right? Because generally, higher interest rate is good for US dollar, but lower interest rate is bad, right? So if they start cutting, the interest rates, right, the US dollar will most likely, be bearish. Okay, lastly, for cryptocurrencies, right, I expect cryptocurrencies to be one of the strongest performing asset class for 2024 as well. Because we have seen a strong performance in 2023, right? But now, we have seen better regulatory developments and a lot more mainstream adoption, right? And also, right, with the growth, with the potential launch of, the Ethereum ETF, right, and also the successful launch of the Bitcoin ETF, earlier this year, right? I think these two factors alone, right, are going to propel going to propel cryptocurrencies a lot more into the mainstream spotlight, right? And people who have been hesitant or have been sitting on the sidelines, right, because of the the bearish years of crypto, right? I think now they might see that now is a good time to get in, right? Even though it's gone up a lot, right? I think there's still a lot more room, right, for the crypto market to grow, right? So this is something that I will continue to accumulate in my portfolio as well. Okay, so overall, the 2024 financial landscape, right, is also quite mixed, right, with with AI and tech stocks, right, expected to continue leading the gains in equities, and also we have strong markets, right, like the Japanese stock market and the Indian stock market, and then we have long-term bonds, right, which will benefit from a lower interest rate environment, and also we have commodities like oil and gold, which can provide important diversification. So if you're looking for a professional trading and investing platform, right, that will allow you to do your trades, or buy assets for your portfolio, XM is the leading brokerage company that is dedicated to providing traders and investors with a seamless and efficient trading experience, providing access to more than 50 currency pairs. As a trusted platform for many traders, XM is committed to helping traders improve their skills and succeed in the trading world. Here are two of their latest products you might find interesting. The first is the XM Competition, which are held on a daily, weekly, and monthly basis. Whether you are a new or seasoned trader, you can participate to win exciting rewards. From withdrawable cash and trading bonuses to physical prizes, there's something for everyone. With categories for both real and demo accounts, you can test your trading strategies and vie for amazing prizes, including a pre-funded account and a chance to become a strategy manager. Next, you can expand your trading horizon with XM Copy Trading. For those aiming to follow the lead of experienced traders, their investor account lets you copy expert strategies, offering a seamless path to potentially enhance your portfolio. Meanwhile, you can choose to become a strategy manager and earn up to 50% profit share by allowing others to follow your successful strategies. In addition, with flexible leverage of 300 to 1 to 500 to 1, you can have more available margin, allowing you to explore a wider range of trading strategies and opportunities. Now we have come to the conclusion of this video, so let me do a quick summary of everything that I've covered. In 2023, global financial markets witnessed a robust post-COVID-19 recovery, with the S&P surging by 24%, which was a remarkable turnaround from the 19.4% drop in 2022. This upswing was largely fueled by the tech sector, right, particularly AI-driven companies like NVIDIA, though gains beyond the top tech giants were more moderate. The Nasdaq Composite also saw a significant rebound. Looking ahead to 2024, which is this year, we can expect a more moderate economic growth, right? As the US tries to manage inflation, right, at the same time, trying to promote growth, and looking for an opportunity to cut the interest rates. The European economy is more varied, right? They are grappling with high energy costs, geopolitical challenges, right? So these are things that might affect, right, the global economy as well. So central banks, right, such as the Fed Reserve, are likely to commence their rate cuts somewhere this year, right, which will be overall bullish for stocks and bonds, right? But if they continue to delay the cuts, right, then we might see the markets react negatively. So a critical focus for this year is that the US economy is able to achieve a soft landing, right, which is balancing their inflation control without triggering a recession. Okay, political and geopolitical factors, right, such as the war in Ukraine, right, and the Middle East, right, and also the U.S. presidential election, right. All these are things that are going to affect, right, the economic outlook, right, and also the market trends, and also other things like the global supply chain, technological advances, right, and also changing consumer behavior, right. All these are important things to look out for. Right, so I'm going to leave you with two questions for you to think about. Right, number one, how will the interplay between the technological advancement and geopolitical tensions shape the global investment strategies in 2024? Right, and secondly, with the Fed Reserve poised to cut interest rates, what sectors or asset classes could potentially offer the best investment opportunities in a changing economic environment? And number three, considering the potential for both a soft and hard economic landing, how should investors align their portfolio to mitigate risk and capitalize on emerging opportunities in 2024? Let me know your answers in the comments below. And if you have enjoyed this video, do remember to like and subscribe and hit the bell notification icon for future updates. That's it for this video, and I'll see you in the next one.